You are watching Daily Market Pulse. Today is Sunday, April 19th, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Oil crashes 9% as Middle East tensions ease, but gold hits nearly $4,900, while crypto fear grips markets with Bitcoin dominance spiking to 58%. Here's the framework for today's briefing. Geopolitical risk repricing, how Middle East de-escalation crushed oil premiums. Precious metals momentum, gold near $4,900 despite geopolitical cooling. Equity market resilience, why stocks hit new highs amid the volatility. Crypto fear mode, Bitcoin dominance spikes as altcoins get crushed. Central bank pivot, how sticky inflation is changing rate cut expectations. Daily financial market update, live prices, gold, silver, crypto, equities, US bonds, and trend. Let's start with the dramatic geopolitical repricing that crushed oil markets. Oil crashed over 9% as traders aggressively unwound Middle East risk premiums following headlines about potential U.S.-Iran diplomatic progress and reduced Strait of Hormuz shipping concerns. This shows how quickly geopolitical premiums can evaporate when the base case shifts from escalation to de-escalation, revealing how heavily positioned traders were for conflict. The magnitude of the oil decline suggests massive position unwinding, while other risk assets like equities actually rallied on reduced geopolitical uncertainty. What to watch next? Monitor shipping lane normalcy and any concrete diplomatic developments, as further de-escalation could pressure oil even lower. Now, while oil was crashing, precious metals told a completely different story. Gold climbed 1.48% to approach 4,900, while silver surged nearly 4%, both continuing their upward momentum despite reduced geopolitical tensions. This divergence from the geopolitical cooling shows precious metals are being driven by deeper structural factors like inflation persistence and central bank policy uncertainty. The fact that gold and silver strengthened while oil collapsed demonstrates multiple risk factors at play beyond just geopolitical concerns. What to watch next? The $4,900 level for gold is crucial. A break above could accelerate momentum toward $5,000. Remarkably, equity markets shrugged off all this volatility and pushed higher. Major equity indices pushed to fresh record highs, with the S&P 500 up 1.2%, Nasdaq gaining 1.2%, and the Dow rising 1.79%. This resilience in the face of sticky inflation and geopolitical uncertainty suggests strong underlying earnings momentum and investor confidence. The combination of lower oil prices and stabilizing bond yields created a Goldilocks environment for equity performance. What to watch next? Whether this rally can sustain if oil rebounds or if yields break meaningfully higher from 4.25%. The crypto space is painting a much different picture, with fear clearly taking hold. Bitcoin fell nearly 2% to 75,010, while altcoins suffered steeper losses, pushing the greed index down to 27, and Bitcoin dominance up to 57.6%. Rising Bitcoin dominance during market stress indicates flight to quality within crypto, suggesting investors view Bitcoin as the relative safe haven. Total crypto market cap declined over 2%, with volume dropping 34%, indicating weak conviction and potential for further downside. What to watch next? Bitcoin's 74K support level and whether dominance can push towards 60 cents. Finally, let's talk about what's driving these cross-asset moves. Central bank policy expectations. March CPI data showed inflation accelerating to 3.3% year over year, prompting Fed officials to signal caution about rate cuts, while the ECB appears set to hold rates steady. Sticky inflation is forcing central banks to recalibrate their dovish pivot plans, which has major implications for asset pricing across all markets. Bond yields held relatively steady as markets adjusted rate cut expectations, while precious metals benefited from persistent inflation concerns. What to watch next? Fed commentary this week ahead of the late April FOMC meeting and any ECB signals about future policy direction. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here's where the key asset classes stand as of Sunday, April 19th, 2026. Gold is trading at $4,879.60, higher on the day, and is higher over the past 5 sessions. Silver is at 81.84, strongly higher today with a 5-day trend of plus 3.1%. In crypto, Bitcoin is at 75,999, higher on the session and higher over the past week. Ethereum is at 2,337, slightly lower today. Other major crypto: Solana at 86.44, BNB at 626.87, XRP at 1433. On equities, the S&P 500 at 701.26, strongly higher. The Nasdaq at 24,468.8, strongly higher. The Dow at 49,447.3, strongly higher. Internationally, the DAX at 24,702.24, strongly higher. The Nikkei at 58,475.90, strongly higher. The FTSE at 10,667.63, slightly higher. On the bond side, the 10-year U.S. Treasury yield is at 4.25%, lower on the session, and the 30-year yield is at 4.88%, slightly lower. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at 82 to 59 cents per barrel, sharply lower. The dollar index at 98.23, slightly higher. The overall tone is risk-on. Equities and crypto are both bid, suggesting investors are positioned for continued upside in the near term. So what's the bottom line for today? We're seeing classic risk repricing in real time. Oil's 9% collapse shows how quickly geopolitical premiums can unwind when de-escalation becomes the base case. But precious metals staying strong tells us inflation and policy uncertainty aren't going anywhere. Crypto's fear mode, with Bitcoin dominance rising, signals flight to quality even within digital assets. The key question now is whether this risk-off rotation continues or if we see stabilization as the week unfolds. Thank you for your attention, and we will see you again tomorrow.